Ever wondered how real estate moguls make their fortune? Welcome to the intriguing world of real estate investment, where fortunes are made, dreams are built, and success stories are written. This isn't a get-rich-quick scheme or a 30-minute television show where everything goes smoothly. It's a dynamic, evolving market that demands understanding, patience, and strategic planning. Today, we're diving deep into the top 10 tips for successful real estate investing. From understanding the market to continuous education, we've got you covered. Real estate investment is not just about buying and selling property. It's about spotting potential, seizing opportunities, and turning hard work into profitable ventures. The real estate market is brimming with possibilities, promising both profitability and growth. But it's not a walk in the park. It requires a sound strategy, a keen eye, and a resilient spirit. So, are you ready to embark on this exciting journey? Stay tuned to discover essential tips to kickstart your journey in real estate investment. Dive into the waters of real estate, but first understand its waves. Before you take the plunge, it's crucial to comprehend the ebb and flow of the real estate market. See, the real estate market is a living, breathing entity. It's influenced by a multitude of factors, and understanding these can be the difference between a savvy investment and a costly mistake. Firstly, we have interest rates. These can dramatically affect the cost of borrowing and, in turn, the affordability of properties. Lower interest rates can mean more buyers in the market, which could drive up property prices. Next, let's consider economic trends. Job growth, wage growth, and even population growth can all impact demand for housing. More demand often equates to higher prices. Lastly, there's location. The old adage of location, location, location rings true. The attractiveness of a particular area can significantly sway property values. Remember, an informed investor is a successful investor. What's the mantra of real estate? Location, location, location. This is as true today as it was 100 years ago. A prime location can turn an ordinary property into a gold mine. But what makes a location good? First off, amenities. A property near schools, hospitals, supermarkets, and parks is generally more desirable. These conveniences attract renters and buyers, which can increase your return on investment. Next, accessibility. A property with good connectivity, be it public transportation or major highways, is a huge plus. People value their time, and a well-connected location saves that. Lastly, future growth potential. A location with signs of economic growth, such as new businesses or infrastructure projects, bodes well for real estate appreciation. So, always keep an eye on the horizon for potential growth areas. Remember, in the world of real estate, it's all about location. The right location can make or break your real estate investment. Financial planning, boring but essential. Now, you might think that real estate investing is all about spotting the right property at the right time, but the truth is, without proper financial planning, even the most promising investment can quickly become a financial sinkhole. Let's start with the basics, a robust budget. This is your financial roadmap, detailing your current resources, your investment target, and how you plan to bridge the gap. It includes everything from your initial investment to maintenance costs to potential renovation expenses. But wait, there's more. You also need a contingency plan. Why? Because real estate is unpredictable. Market shifts, unexpected repairs, vacancy periods. These can all throw a wrench in your budget. A contingency plan is your financial cushion, providing extra resources to handle these unexpected costs. Think of your budget as your financial compass, guiding you through your investment journey. And your contingency plan? That's your life raft. A well-planned budget is your safety net in the unpredictable world of real estate. Real estate investment is not a solitary game. Remember this as we dive into the world of networking. In real estate, the importance of networking cannot be overstated. It's about more than just exchanging business cards. It's about building relationships, fostering trust, and creating a community of individuals who can provide valuable insights, advice, and deals. Imagine having a group of seasoned investors at your fingertips, ready to share their wealth of knowledge. They've been where you are, navigated the hurdles, and emerged victorious. Their experiences, their triumphs, and their mistakes are lessons waiting to be learned. Also, consider the potential deals that can come your way through networking. A colleague might have a property they're looking to offload, or they might know someone who does. The possibilities are endless when you have a strong network backing you up. Remember, in real estate, it's not just about what you know, but who you know. In real estate, your network is your net worth. Due diligence, your compass in the real estate jungle. When we say due diligence, we're talking about the careful examination and consideration of the property you're eyeing, the person selling it, and the market conditions surrounding it. It's a bit like being a detective, and it's absolutely crucial in making smart investment decisions. Think of the property as a book. You need to read beyond the cover. Look at its history, any structural issues, potential for growth, or even legal problems attached to it. The seller too deserves your scrutiny. Are they trustworthy? What's their track record like? And don't forget the market. Is it a buyer's market or a seller's? What are the current trends? What's the forecast? This knowledge can help you negotiate a better deal. Remember, in real estate, knowledge is power. The more you know, the better equipped you'll be to navigate this complex landscape. Due diligence can save you from costly mistakes. In real estate investment, patience isn't just a virtue, it's a necessity. Now that's a phrase you might have heard before, but what does it really mean? Well, let's break it down. Real estate investment is not a get-rich-quick scheme. It's a long-term commitment that requires time and dedication. You see, the real estate market operates in cycles, and understanding these ebbs and flows is crucial. There will be times of growth, stagnation, and possibly even decline. But the key is not to panic. Instead, keep your eye on the long game. It's also important to remember that it can take time to find the right property, secure financing, and even longer to see returns on your investment. So, practice patience. It's a skill that will serve you well in this industry. Lastly, don't rush into decisions. Take your time to do thorough research and make informed choices. Remember, Rome wasn't built in a day, and neither is a real estate empire. Never put all your eggs in one basket, diversify. The old adage holds true, especially when it comes to real estate investment. Diversification is like a safety net. It spreads your investments across various property types and locations, thereby minimizing your exposure to any single risk. Think of it this way. If you invest solely in luxury condos in a single city, and the market for luxury condos tanks, your entire portfolio suffers. But if you also have investments in commercial properties, rental apartments, or even properties in different cities or countries, the blow is cushioned. Diversification also opens up avenues to potentially higher returns. Different property types and markets experience growth at different times. By having a diverse portfolio, you're more likely to always have a piece of the action when growth occurs. Remember, real estate investment isn't about putting everything on one horse and hoping for the best. It's about strategically spreading your resources to mitigate risk and capitalize on multiple opportunities. Diversification is the key to balancing risk and reward. Leverage, the power tool in your real estate investment toolbox. You see, leverage in real estate investment is like a double-edged sword. It can amplify your gains or magnify your losses. It's a method where you utilize borrowed capital, other people's money, to increase your potential return on investment. Imagine this. You have $100,000. Instead of buying a property outright for that amount, you could, for instance, put down 25% as a down payment and use the rest to invest in 4 properties. That's leverage. However, it's important to remember that while leverage can magnify your profits, it can also magnify your losses. If property values decline, you could end up owing more than the property is worth. So always exercise caution and make sure your cash flow can handle the loan payments. Smart leverage can amplify your profits. But remember, with great power comes great responsibility. In the world of real estate investment, learning never stops. Yes, you've heard it right. There is an unending wealth of knowledge in this industry, and staying ahead of the curve is key. The real estate market is dynamic, always shifting, always evolving. It's crucial to stay updated with market trends, to understand the ebbs and flows of property values, and to anticipate potential shifts that might affect your investments. You need to keep a finger on the pulse of the market, and that requires continuous learning. New investment strategies crop up all the time, and they're worth exploring. Perhaps it's a new approach to financing, or a unique way of sourcing properties. Don't be afraid to delve into these fresh ideas, and let's not forget about regulations. They can change rapidly and can have profound impacts on your investment strategies. Keep yourself informed, and you'll always be prepared. Remember, invest in your knowledge, and it will pay the best interest. So let's quickly revisit our top 10 tips for real estate investment. It all begins with understanding the market. Knowing the trends, the ups and downs, will guide your decisions. Then, it's all about location. The right location can make or break your investment, so choose wisely. Financial planning is the backbone of your investment strategy. It's the map that guides your journey. Building a network of reliable contacts is like having a team behind you, ready to assist when you need it most. Due diligence is the shield that protects you from costly mistakes, ensuring you're making informed decisions. Patience is the virtue that allows your investments to grow and flourish. Diversification is the safety net that guards against market uncertainties. Leverage, when used wisely, can amplify your investment potential, turning small steps into giant leaps. And last but not least, continuous learning. The real estate market is ever-changing. Staying educated keeps you one step ahead. Remember, success in real estate investment doesn't come overnight. It's a journey, and these tips are your roadmap.